Rob, we're seeing a bit of a pullback, but we did see these very strong gains on the JSE yesterday and in fact for most of July.
Yes, the market's been very strong over the last few weeks. 13, 14 days consecutive up days in many of the markets around the world. And I think people are taking a slight breather in these markets and taking a little bit of profit at the moment.
And do you think it's going to take more positive news to get this rally going again, or do you think that the rally might be dying off for the time being?
It's difficult to say. We're very close to support levels and breaking some support levels in many of the markets. 1,000 broke on the S&P yesterday, and we'll see if that can continue. We feel there's a lot of resistance on that S&P. It's retraced 38% of the losses that it had done earlier in the year, so it's a very good increase in that market. We feel there's a lot of resistance there, and the next few days will be very important for the markets. But I do think people are taking some money off the tables, especially those that were lucky enough to get in early March.
Of course, you said the S&P crossing 1,000 yesterday. That's the highest in almost 9 months, up 38% since its low point. And of course, most markets, including the JSE, are up significantly from their low point at this stage, aren't they?
Yes, definitely. I mean, there have been fantastic moves in the market, and there's actually been very good money to be made in a very difficult environment in the underlying markets. So I think it is quite prudent to take a little bit of money off the table at the moment. And I wouldn't go short just yet. As you know, you're following the trend, and it's been a very strong trend. Until that trend turns, I wouldn't start going short, but I would take a little bit of money off the table.
But still keep some money in equities at this stage, though.
Definitely. You know, you're not earning too much money in the banks, especially overseas. I'd always have some money in the markets, definitely.
Now, just looking at our market, we have the all share down 0.6%, industrials flat, financials and banks both down about 0.2%. Really, resources that are dragging down the market stay down 1.3%. But it really has been resources that have lifted our markets in the recent weeks, hasn't it?
Yes, obviously, as China starts to grow, their PMI came in above 50. And they are importing a lot of metals as they restock all of their supplies. So that is pushing the resources, and a lot of people are still thinking that the dollar is not necessarily going to improve that much over the next few months. So they're still looking into commodity currencies, and obviously the resources in South Africa are doing very well.
Of course, we have banks down 0.2%, and yesterday we had those results from ABSA, and ABSA's share price actually ending the day over 1% higher, despite what looked like pretty dismal results on the face of it.
They weren't the greatest results, and all the banks are battling at the moment. The problem is really impairments. I think on the commercial level, the impairments have moved up 197%, on the retail level about 110%. And it's something that Maria Ramos said last night, that they do not expect that to change, and I think it could even increase into the end of the year. So they only see that bottoming at the end of the year. So, you know, numbers coming in by the end of the year are not going to be much better than now, and probably even a little bit worse. So I'm not seeing how that share could have really gone up yesterday from a local front. The only interest I could see is from foreign clients coming in. South African banks currently have a debt-to-equity ratio of about 13 times gearing, whereas you get a bank like UBS, which is still 70 times geared. And therefore, they still see that South African banks are, on a balance sheet as a whole, are relatively good. So foreigners look to come into that as well, because they don't see so much risk there.
Of course, we have seen results coming out from foreign banks as well, and most of them beating expectations. So do you think our banks are lagging the cycle at the moment?
They are lagging the cycle, and it's really the underlying economy. There's a lot of green shoots coming through in the European and overseas economies around the world, and you can see that pushing into the earnings from these banks, and the banks are actually making good profits, and their numbers are coming up quite nicely, obviously from a very low base. However, on our side, the economy is battling. Our PMI numbers came down again, very weak numbers from the manufacturing sector, and I can't see the banks getting much improved revenue from the manufacturing sector.
And of course, we had those vehicle sale figures out just a short while ago, and the vehicle industry also under pressure at the moment.
Under immense pressure at the moment, and one of the big reasons is also the strong rand. Exported vehicles fell 60%, which is a very big number, and obviously very worrying for manufacturers in South Africa.
What are we looking for next? We know there are more economic data coming out later this week, particularly those jobs numbers coming from the US on Friday. Are we looking for more better company results, or are we looking for some economic data to actually back up the results that we have seen so far, Rob?
Well, on a local front, I don't think so. I think that on the local front, we are lagging everywhere else, and our numbers are going to be relatively poor for the next 6 months. From the foreign side, the numbers have been excessively better, much better than estimates from analysts, and I think that will continue on the foreign side, and it can give our stock market a little bit of support, but not necessarily our underlying economy yet.
And if we break through these key resistance levels, do you think we could still see some more upside on our market?
I think, again, on the foreign side, I think we can see a little bit more upside, but I don't expect much more upside on our market at the moment. And generally as well, I think that we've had a very good run in these markets, and a much more increase of 5 or 10%. I don't see it really coming to fruition at the moment.